Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, and this is January 8th, 2020. I keep saying June 8th. It's January 8th, 2020, and we're about 4:20 p.m. I am not going to cover the Iranian situation in this video, and the reason I'll do it in the metal and I'll do it in the financial markets where it belongs. Suffice to say, we were up today in the grains as the grain market is getting ready for Friday's all-important supply-demand report from the USDA. It comes out 11 o'clock, and then next week, hopefully, we get the signing of the U.S.-Chinese first phase of a trade deal. Pressure came off the market. You were up in the stocks today, and you came up a bit in the grains, but I think it's more evening up going on there. The good news for the farmers is you're up for the week, 7 3/4 cents. You're still having trouble at this approximate 938, 940 zone. Haven't been able to bust through that in any way. I think the market's waiting to get closer to the supply-demand report to figure out what to do, and then, of course, the Chinese deal. When you take a look at beans, look at how this market's finding support just under the 940 area. Now the question is, what can it do with it? The pattern is still bullish. The market has a general bottom between 937.5, that's this first arrow, 937 3/4, back up. Take out the 937 3/4 zone, and then you probably are in that evening up, waiting for Friday, and then next, maybe, Wednesday for the signing. And I don't know if that will get any news or not on the first phase of the U.S.-Chinese trade deal, and a lot of people want to know what's going on. What I can tell you is the market has made a stand against the 18-day average of closes. You know that I call that the line in the sand. And what the market has done is it's held the 100-day average from way back here when it got over it, and I'm talking December, hasn't even come back to try to challenge that. Now, if we go up, and that's the if, I look for the resistance in the wherever the Bollinger Band is, and it's been falling to the tune of about 2 cents a day. So it would be closer to the 960 level probably tonight. Support the 18-day average of closes, take that out, and you might be headed back into that general zone of the 100-day and the lower Bollinger Band, or just whipping around that 18-day. The reason I say whipping around, you made a higher high, so if you didn't take that out, in fact, even if you take that out or don't, if you get under 937, you still have a higher high and you'd have a lower low. You wouldn't have a trend, is the point that I'm making right here. And momentum is divergent from price. So it's been coming down, price has been trying to go up, and we just got divergence in the market. In the meal market, I see the 18-day average of closes as the key number. Yes, you didn't hit it today, but listen, you got so close to it, you got up to as high as 303.20, the number's 303.40, and these other days you keep hitting it. So that's what I'm seeing. A bias to the downside in an oversold market where I wouldn't be surprised if they're taking off the short meal, long oil spread is the evening up process, and I can argue that you'll hit that 18-day average here, and then the market should try to find its support in the oil. Oil could turn a trend down if you follow through and you closed under 34.28. So I'll be watching that tonight to see what it does. Wouldn't be surprised, though, if it hits the 18-day average. In the corn market, the resistance is the 18 and the 100-day averages, and they're about the same number, 386 3/4. Again, I don't think the trade's going to do an awful lot going into Friday's report. You're already oversold. The Bollinger Band's going to creep up again tonight and probably be right about where today's low is, so I'd be watching that. We'd had an outside day up. So is that enough of the correction that the market's had to say it's going to make a stand here? Again, you've got these reports coming out. If you took out today's low, it could be a sign of a failure. Remember, you have an outside day up, and the one thing I don't like to see is an outside day up's low taken out. It often leads to a challenge. If the closest moving average under the market, that would be this, or the Bollinger Band, the closest of. In the sugar market, neutral. You went down to the lower Bollinger Band, basically within 72 hours back to the upper band and right back to the 18-day average. And in the pattern, a higher high, lower low. The market is going nowhere right here. It's churning. That doesn't mean it can't explode at some point, but for the time being, it's stuck in these bands and not moving out of them. Coffee market still in an overall how do I say it? The pros threw the towel in. Once the market cleared this area, even without a trend, it just collapsed. So we've gone from this 135 roughly area, 134.65 to 118. That's a 16-cent break. Instantly, you might get an embedded reading, but you've already left so much money on the table. I don't know that the pros want to push it. I think the market instead is riding that band down and just wiping out those that are long this market. We certainly have bias down, but we are oversold and could develop and convert that to a bearish embedded reading. In the cocoa, now I don't like the pattern. The market's got a pattern of a lower high, a pattern of higher lows, narrowing into the support of the 18 and the 100-day averages. The bulls win, I think, if you can get up and over the 25.49 level. Their dilemma would be, then you've got the Bollinger Band, which is falling each day, and it's falling to the tune of about 10 points a day. So even if you clear that number, you're going to be in the 25.80 level approximately, and that's very close to that breakout number. It's only 30 points there. In the cotton market, still bullish. And as I've said, I think that one of the winners of this situation with the U.S. and China will be cotton, which is an export market, but you still have the dilemma, do you want to go through the report? The stochastics are embedded, and as it stays embedded, each time we're breaking, we're finding support. The cattle market, stuck between these Bollinger Bands and this sideways action. Got to pay attention to this. Out of this comes big moves. Now, the problem has been you're going to have to either let it get out to the upside or downside before you do anything with it. Just a difficult market right there. Feeder cattle's in the same situation. Sideways action. I'll give the bias in both to the upside and the trend up, but they haven't followed through against Bollinger Bands, and it is typical you get overbought at a Bollinger Band top the first challenge of it. That doesn't stop me from saying you could break out to the upside, so I'm watching that very carefully. And in the hogs, you're neutral. You've got the higher high, lower low. Now, I did put out today, I told traders I would do it, and I've been up since I got to bed at 2:30 last night watching the war situation, client accounts, and so on, and I was up at 4:30 reading again, so I'm pretty tired today. But I did manage to put out a special report, a video report, on the gold market. It's the first one I put out, obviously, for this year. We're only 8 days into the year, but I give you an idea as to what I'm seeing, what it's about. If you'd like to see the report, all you need to do is go to our website at www.iraepstein.com. Under the word research, you're going to see my metal report there. Click on it. Away you go. It's a pretty interesting report. I covered an awful lot of data for you and give you all the different scenarios that I'm seeing. If you need help with it, just call my staff during the day at 866-973-2077. They'll be happy to take care of you. I'll cover a lot more detail on the missile strike last night and what went on in my metal and financial reports. You have a good evening.